Hey, good morning, Bob. Trade Genius, 23rd of March. I'm going to do a number of videos this weekend, but I want to talk the broad market this morning because I think that has everybody's attention. And this is a yearly look, a daily look going back 1 year. And it's important because what happened and part of this is going to be a little bit of lesson on why things go where they go and stop where they stop. And the market was on a mission, and still could be on a mission to get back and try to double top the highs from October. But it ran into a standard deviation line that was right at a low volume area here, and they tend to stop these moves. In fact, I think a lot of us were expecting maybe even get up to here because they usually cross over this chasm, but it got stoned right in the middle of it, and then it came back down to this line, but actually broke back down again. So what you have to look at is what does this really mean? Is that now you have to say, okay, is it going to come back and test the top of this line here, which is also what's called the value area. 70% of all volume is between these two purple lines, the one down here below. And then here's where the most volume was transacted. It happens also to be a center line for the standard deviation of volatility. So if it stays below this line here, it's going to bring in just 27.55 area or back to 27.27 area as a test, or it can come back and test here and go higher. You just have to kind of wait and see. But this brought us to a point here where we bought puts, and they're profitable. We're only talking 2 weeks out, so we got to now look at a little bit more detail. We go to here. There's a bit of an eye chart, but I'll zoom in here in a second. I just want to show you now. This is on a 4-hour time frame, so we're a little bit more micro, where it's really, the other one was kind of climate. This is a little bit more weather, and so what you see here now is that we broke down. But the thing that caught our attention, the reason why we bought puts, is that this is relative strength in stochastics, and it was making lower highs, if you see here, as price was rising. Okay, and that's called a divergence. That means the enthusiasm was waning as we were getting higher. And so that usually causes a breakdown, and it did. And so we have that. So now you have to ask yourself, where to? And so here's now called a shelf. This is where a lot of volume was transacted, and we're pretty much right at that area. So my expectation is we'll probably touch, we're at 2807. This is ES. We'll probably come down and test this area, and if it holds, we're going to go back higher. If it doesn't hold, then we're going to come back down in this 2750 area, and then we start bringing in that chart I was showing you on the daily. So before people get really excited about the crashes coming, it's going to stair step down if it goes down, and we got to get through this volume shelf right here first. And look, there's still a lot of money sloshing around out there, and we don't know really why this thing fell on Friday, really, because they pumped it pretty hard on Thursday. You know, the Mueller report came out, and we're going into the end of the month, so that probably caused some of the weakness. Forget the China trade thing. That's just algo moving stuff. A trade deal with China does not benefit the United States. So right now we have the trade deal because we have the tariffs in place, and so a trade deal is just some sort of talking point for the elites or some crazy thing. It doesn't even cross my horizon. I'm just looking at the action in the charts. Charts tell me right now is that we're settling back down, and my personal guess is we're going to come back down and try to test lower before we test higher again, and we have to get through the earnings season. So I think that's going to give it some grief, and then from there we'll see what happens. So that's it on the ES side. And see, I'll zoom in a little bit closer here. We've been watching for this thing to fade, and then once we saw the lower highs, is where I bought puts here, and I bought a calendar spread. That's the other thing too, is that it's hard to go to straight puts because that's how you lose money, because the smart money actually selling all the time. Buyers are dumb money, and I don't mean we're dumb people. It's just that they know how to price these models better than we do. So I did what's called a calendar spread. So I bought puts on the 279 strike of SPY for next Friday, the 29th, and I did that on Wednesday morning. But I immediately sold the Wednesday 279 strike. So I bought around 126 area, and I took 15 cents off right away. So I was down to 110 cost. And then I sold again Friday, which was yesterday, the 44 cents I extracted, and then I closed that at 7 cents. So I took 37 cents more off of that trade. So now I'm down to 74 cents in cost, and then I went ahead and I sold for 58 cents for Monday. So at the very worst that can happen to me, if the trade blows up on me, I lose 12 cents a contract, which is how you should manage, trading options. You should always be doing either calendar spreads or vertical spreads, or what they call condors, which are just multiple vertical spreads, and that way you're taking cost out of it. And then if the trade trends your way, then you can do what's called rolling the trade up and out. We've done that with precious metals when they start trending, and we'll do that again. You can make a lot of money that way. So that's kind of where we are, and I fully expect us to run that trade out. And if it pushes through 279 on Monday, the trade is profitable for us right now. We're over 50% profit on the trade. So I may even close it on Monday depending on what it does. So I just wanted to share that with you, and that's kind of where we are. I'm not going to be bullish on the market until we get through the earnings season, because I think it could be pretty eye-opening, and we may be able to get into this market again at a lower price. I'm still of belief that we'll break through 2,000 on the SPX. And then I think that's where we're going to settle. And then I think from there, then we'll just see if we go into a recession or not. All right. Well, thanks for listening. If you guys are interested in how we trade, we've had a great time. We're making money on the miners every day. We had a beautiful move on a couple of them on Friday, and they're holding their value, and they're ignoring the attempts to sell them off. And once people really realize that gold's not going to be going down anytime soon, then I think you're going to see a big lift off in the miners, and we're trading them. So check us out, tradelikeagenius.com. We have specials running today, ending, and make some money with us and have some fun and learn a lot. Thank you. Bye-bye.